Okay, let's talk about Bitcoin dropping below $63,000 today. Wait, why does this even matter? Because the crypto market is acting like a giant mood ring, reflecting every twitch in investor sentiment. But here's the twist. This dip isn't just about numbers on a screen. It's a window into how crypto is still chained to the old financial world, despite all the decentralized hype. Let me unpack this. First, the Federal Reserve. 3 board members wanted to raise interest rates again. Now, in a vacuum, crypto shouldn't care about Fed decisions, right? But here's the thing, Bitcoin isn't in a vacuum. It's trading like a risk-on asset, which means when the Fed tightens, investors panic and flee to cash. But wait, isn't crypto supposed to be digital gold that hedges against inflation? That narrative feels broken. Or maybe it's just growing up and realizing it's part of the system it claimed to disrupt. Interesting paradox. Then there's Coinbase tanking 10% after a brutal earnings report. Low trading volumes crushed their revenue. But here's what bugs me. Why are we still measuring crypto's health through centralized exchange profits? If anything, this shows how disconnected retail speculation is from the actual utility of blockchain tech. Coinbase's pain might be a blessing in disguise. Less hype, more focus on real-world use cases like stablecoins and AI-driven transactions. Those are the quiet revolutions happening while everyone watches price charts. Now, the Clarity Act, a crypto regulation bill that might not pass this summer. Lawmakers are dragging their feet, and investors are frustrated. But let's be honest, regulation isn't a binary good versus evil story. Overregulation could stifle innovation, but zero oversight keeps scams rampant. The real question is whether the US wants to lead in crypto, or let Asia and Europe take the reins. This delay isn't just political gridlock. It's a statement about where the country's priorities lie. Here's the kicker, spot Bitcoin ETFs just saw $233 million in inflows despite the sell-off. iShares is dominating, and even Banco Santander is dipping its toes. This is institutional money whispering, we see value here. But wait, if ETFs are meant to democratize access, why are they propped up by giants? It's a double-edged sword. ETFs bring legitimacy but risk centralizing control. Is this the future of crypto? Quietly assimilated into Wall Street's ecosystem. Let's zoom out. Bitcoin gained 4.3% in July while the Nasdaq dropped 3.2%. So crypto isn't dead, it's just evolving. The real story isn't the price, it's the gradual shift from speculative frenzy to infrastructure building. Stablecoins are the boring but essential backbone of blockchain payments. Agentic AI could automate smart contracts in ways we're only starting to grasp. These aren't flashy headlines, they're the seeds of the next decade. So while today's dip feels scary, ask yourself, are you trading on fear, or are you watching the pieces that'll matter in 2030? That's the real divide in this market. What do you think? Drop your take below, let's debate it.